To our webinar on the Paycheck Protection Program Round 2. Please be aware that we are recording this session so that we can share it with those who are unable to attend the live event this morning, and we're also going to attempt to broadcast the event via Facebook Live. My name is Margaret Joyce. I am the president of the Greater Dover Chamber of Commerce, and I am pleased to announce that this session is part of our local expert series, which is sponsored by Aurea Solutions, and we'll hear from Chris Slays of Aurea Solutions following the presentation. I hope I'm pronouncing that correctly. If not, I'm sure Chris will correct me at the end. And just a reminder, I hope you'll join us tomorrow for our business open house, Winter Wonderland, from 4 to 6 p.m. Lickies and Chewies is our host for the event, so be sure to stop by their store tomorrow to pick up your complimentary hot chocolate to enjoy during the open house. You can register at dovernh.org. It is a virtual event, but get your hot chocolate so you can get in on that action. If you haven't had their hot chocolate, it's fabulous. So down to business. Our panelists today include Tim Dargan, Senior Vice President and Senior Commercial Loan Officer with First Seacoast Bank, Peter Ventura, CPA, and Paula Daley DePlanche, CPA, who are both from Leone, McDonnell, and Roberts, PA. Our panelists will provide an overview of the latest round of the Paycheck Protection Program, and then we'll open it up to your questions. You can type your questions in using the Q&A feature, which is at the bottom of your screen. And if there are questions that our panelists cannot answer during the session this morning, they have generously offered to find out the answers and get back to you as soon as possible. So again, Q&A at the bottom of the screen. I believe you can also use the chat feature if you are having any technical difficulties. Melissa Launder, my co-worker at the Chamber, will try to help troubleshoot those. So I think we will get started, and I believe Peter is going to lead us off. Take it away, Peter.
Pete, you're on mute. Pete, you're on mute.
Hold on.
Sorry.
I've got everything. Can you see the slides?
Yes.
Perfect. Well, good morning, everyone. Thank you very much for the nice introduction. I believe we starting it off, or are we going to have Chris start it off? I thought we were going to go the other way.
Chris had a slight introduction. He's going to finish up at the tail end.
Perfect.
Close us out.
All right. Just making sure I didn't mess anything up.
No, we made a little change before you.
I went off on a phone call or out of space.
Yes.
Happy Monday to everyone. We're going to go through several slides discussing the PPP funds, both rounds 1, rounds 2, and then a couple of short summary of what other things are out there. I think the plan for this is really to hope the viewers understand what's going on, ask questions. Again, feel free to chime in on the chats. This is more of a working session for those out there. I think the great piece is having Tim here with us from the bank. A lot of the things that we do with our clients sometimes is questions. We do not know the answers. I think Tim being here is going to certainly provide a lot of data for us. Without any further piece, if anyone wants to chime in, please feel free. As I just mentioned, the PPP Act, the CARES Act, and then the new Consolidation Appropriations Act, I will try to stay away from the verbiage of that to keep it simple and plain terms. If you've received your PPP funds, and oddly enough, I heard this weekend, the question still remains, how do I treat them, where do I treat them, and when do I treat them? We're going to go through this entire topic session to deal with all those facts, whether it's taxable, it's not taxable, whether you have to pay them back or you don't have to pay them back. And I can promise you, I was, oddly enough, at a restaurant and I heard someone talking about this, and the conversation went on for about 45 minutes. I did everything I could do not to say anything, but I didn't want to give them too much advice and come back and get me. So let's go ahead and start, and then I'll throw it over to Paula. You can go ahead and start down the forms.
All righty. Morning, everybody. We figured we'd start off on just the, round 1 forgiveness forms, because I know some people are still haven't started or are in the middle of preparing their forgiveness forms. The 4 options that are available, the very first one, the Form 3508S, is for loans which we've all been anxiously awaiting for those of 150,000 or less. That's the simplest form available. It's basically a 1-page form indicating that you've spent the money for its intended purpose. And then you have to sign off attesting to certain things such that you used them appropriately. So that was previously at $50,000, but with the new the new updated act, they raised it to the 150, which they had originally thought would be there. So as far as backup, it indicates on the form that it's not required. However, that doesn't mean that you shouldn't be keeping that information. All of that information should be kept for a period of, I believe it's at least 4 years. So if you have any questions as to the amount of time, just let Margaret know and I can double check on that. Form 3508EZ, which you'd think would be the easiest one, is really the second tier. It's available if you meet one of the following 3 options. If you're self-employed or an individual contractor with no employees, or you have an annual salary or hourly wages of your employees that were not reduced by more than 25% during your covered period, and no reduction of employees. Or the third amount, if you had an annual salary or hourly wages that are not reduced by more than 25%, and the reduction in employees was because you weren't able to operate at a full level capacity due to government mandates. So if you meet one of those items, you are able to fill out that form. Again, that's that one you're required to provide documentation to your financial institution. And, basically most people are using payroll, and we'll go over that on the next slide. But Form 3508 is basically if you're not using 08S or EZ, you're going to be using that one. And that's typically if you've got more complex, if you've reduced your wages by greater than 25% and that you have a reduction of employees and you don't have basically a reason for that the person, for example, chose not to come back, or, there was, like I said, the mandates. The final one is Form 3509. And for most people, I'm guessing on this call, aren't wondering. So it's for loans of $2 million or more. So we do have at least one client that Pete has at this point that I know of that is on that piece, but most people aren't meeting that. So next page, Pete.
Actually, just a couple of quick points on this, and I don't know,
Sure.
Tim, you'll go on in this. I know one of the things that we found a lot is, in certain instances, these forms that are there, that the banks have used an internal form, if you will. And Tim, I'm not sure if the bank does use this, which is in lieu of these forms, where you'll go on, log on to your site and, fill out whatever needs to be filled out, or are you requesting these actual forms?
Yeah, Pete, we're requesting the actual forms.
Yeah, I've seen only that myself, Pete, so.
So it's interesting enough, and that's why I said the form follows the logic. It seems to go through it. I think when you go through these forms, you'll see that, as Paula said, the easy, you would think it would be that easy, but I look at it and I go, why is this that problematic?
I don't know. I think because it came out, before the S in the scheme of timing.
And I won't make fun of anybody at the government, so we'll be fine with that.
Yeah.
I guess the other question on these forms is going through this process, the 3509, if you are filling it out, I'm assuming that you're working with somebody. So it's the 3509 is more just a bunch of questions to make sure you didn't use the funds that you didn't need them for.
Right. And that you were, that you really needed the funds is basically what it came down to. As far as the timing, I mean, originally it was supposed to be 8 weeks, as most of you know, but then they allowed you to extend it for 24. So when you're filling out the form, you either have the option of using 8 weeks or 24. We've typically told people use the 24-week option because it allows you to just use only payroll costs, which creates a much easier substantiation for you to submit over that period. And that substantiation, most people that are using certain payroll services are able to obtain those reports right from them, as long as they we're aware that you have a loan, and even if you have to do it after the fact, you can inform them you have a PPP loan and that you are, and you have to provide them with the date and so forth. So again, even if you haven't informed them, you are able to go back with, again, certain payroll services that are out there. As far as the computation, as most people know, it's for payroll, insurance, as far as health insurance, rent, and so forth, utilities. Again, most people are using payroll. And additionally, as part of the second act, there are new expenses that we'll highlight when we get into PPP 2.
On the, Tim, what are you doing for the self-employed individuals? So if I'm last year, let's make me an accountant, I guess. I'm a self-employed individual. I make $50,000. I provided the upload when I applied for it for a Schedule C for my 1040. So here I am into 2020, into 2021. I've gotten my loan last year of say $7,000. I've got to go to the bank. What am I doing as a self-employed individual? How are you handling that?
You're just, well, under the new forgiveness, is this forgiveness or for the application?
Forgiveness.
Forgiveness.
Yeah, that's what I thought. I'm sorry. You're just signing and attesting this to the 33508S, and you don't have to provide any information whatsoever. You have to keep it for 4 years on payroll documentation, 3 years for other. Right. But no, that's
greater
it. It's
than
pretty
150.
straightforward.
Let's use that example, maybe, Pete.
Okay, no, but I asked this because I think for people out there, the reason I went down that is I've heard from other, I won't say the bank, where they said, well, we need to say that you paid yourself the money. And I thought, well, that's kind of awkward. So I know some people bank to banks are getting differences. So let's flip the story. Let's say I am self-employed and I took $160,000.
Yeah.
And most of it was, let's say 80,000 of it was mine and the rest was payroll related. What are you doing to prove the self-employed employee?
We haven't come across that one yet, Pete. You're as an owner, your max payroll is, I think, 20,000 and change. I think you get 2.5 weeks at 100,000 a year. Other non-owners can get a max of $46,000 in the payroll.
Yeah, I think. Tim.
Go ahead, Paul.
No, I just, some banks, Tim, were asking for copies of checks and copies of bank statements.
Well, I think that's changed now under the new forgiveness rules. December 27th was the new legislation, which has streamlined the smaller forgiveness, smaller loan forgiveness process. But you're right. Prior to that, we were getting copies of bank statements, proving payroll, checks to the owners. A lot of people opened up a second business account, and they were strictly paying all eligible expenses out of that second account where the original PPP loan proceeds went into.
Yeah. All right.
I think that's the key that I want to get out to anybody who's listening is most are doing it the way you're doing it. There are some out there that, I've seen the emails come across going, they're asking for this, this, and this. And of course, we just tell them you don't need that, but it's what the bank requests. So that's really what I kind of want to show. Okay.
Yeah. And as far as the computation, originally the EIDL, the economic injury disaster loan, that had to be originally deducted from the forgiveness amount, but now that is no longer required. Yeah. And, just as far as your submission, you need to submit it through your bank or your financial institution's website. And, you will receive confirm once it's approved. And, you have 10 months after your covered period to submit your application. So
I think the big thing, and I mentioned it, and I actually had a call with somebody on Saturday on this, he would probably be the key person that this is kind of out of sight, out of mind. They forget to do it, and all of a sudden, 10 months later, it turns into
Right.
a loan. I'm still willing to make a good wager that at least one client will do it. It's not that they did it on purpose. I'm assuming at that time that the bank's hands will be tied and it becomes a loan and you're not getting forgiveness. I think that's probably the biggest problem. One other quick statement on the computation. When you're using your payroll, and I would assume that the bigger payroll companies would do this, if you are receiving Family First credit money for payroll, I believe that payroll is going to be backed out of your payroll computation.
Right, that's correct.
Because we're using the 24-week period, it's probably not going to be an issue. If we've had, I know one company, I think he had the whole office was out for about the 10 full days. He was shut down for, I think, 8 employees. That's a long time to be shut down, so it does make a difference.
Mhm.
All right. Fund-filled reporting. Are my PPP funds taxable? This is what I heard about all weekend. They are not, sort of. Your PPP funds are not taxable with the IRS. They are going to be reported to the IRS in some forms, but they are not taxable. However, for state purposes, each state has its own clause. New Hampshire just came out, I think, on Thursday, saying that they are taxable. Maine, Mass has different, I think Mass is taxable for corps and not for individuals. Everybody's changing every point. I think the big piece is you understand it's not taxable for federal purposes unless, I think there was a clause in there, unless you misuse the funds,
Yeah.
which if you're going to misuse the funds, you're probably going to lie on your tax return anyway. So
You get other problems.
if
As
you
far
do
as
not-
the timing, Pete, the timing, as far as whether, your loan's been forgiven or not, excuse me, they may want to check with their tax advisor on that because, basically if it's under the 150 and you've spent it appropriately, you may want to recognize the transaction again.
I think that we would agree with that. I think most of the returns I'll do will be forgiven on the 12/31 returns.
Yeah.
The only one that I'm not sure on, and I don't think we're going to do, is the loan that's over 2 million because it is subject to audit. And because of that one clause in there that says that if you don't need it and they determine that you didn't need it, I don't want to pay tax on it only for it to come back in 6 months from now and have it audited and then have it not taxable. Tim, have you guys processed any of the $2 million loans yet?
Pete, we didn't do one loan that was over $2 million.
Is that why I got rejected? I asked for.
No, we were lucky about that. We did some close, but no, none over 2 million.
Perfect. All right. I think I would assume that the forgiven piece, I can't imagine that. I don't know anybody who's going to take this as a loan. I've yet to see it. And we'll get to this later. We may see this on the PPP2 rounds. But I don't know, Tim or Paula, I don't know that any one of us have seen that this is going to turn
Well, there may be one I have that might be an issue, but it's a whole different story as far as the shutdown of the business and so forth. But, as far as government mandate, but
perfect example. So I've got, actually, there is one. I've got an entity that had $500,000. We did the computation. They're only going to spend $400,000. A big question is it all or nothing? And the answer is no, it's not all or nothing. So what'll happen is the forgiveness goes in, bank processes it, SBA processes, says, fine, you've gone through it, you owe $100,000. Now it goes back to your terms that we've discussed of 1%.
Yeah.
I think that may be the only one that I'm going to have. I think it's, go ahead, Tim.
Hey, Pete, the loans that were made before June, so the initial round, the big crush that were done in early April,
Yep.
Those terms were originally 2-year notes. So it's important that anyone that has unforgiven debt ask their financial institution to extend the note to 5 years. And that's eligible within the terms of the program. And
Yeah.
that way they get a little longer time to repay any unforgiven loan amount.
yeah,
Great,
good
great.
point. That's on the slide as well, Tim. It says, says parenthesis, unless lender agrees to reflect loan or maturity date. So, at least.
Oh, yeah, I'm sorry, I didn't see that.
No, that's okay. And
No.
maybe,
It's great. It's a great segue. I guess the next question goes, all right, I've gone through my loan. I've got a $500,000 loan. I did receive it in April. 400,000 is going to be forgiven. I have $100,000. I know, Tim, you keep muting yourself, but if I have $100,000 due, what's the time frame that I have to ask for an extension? Can I do it after the application has been submitted, or when do I have to do it?
You would do it after the forgiveness decision is made by the SBA.
Okay.
So the bank would receive the 400,000, pay the loan down. There'd be 100,000 left over and then that would be payable over 5 years or less, depending on what the borrower's circumstances and cash flow are. It's at 1%. That doesn't change, unsecured. And if there's a default down the road, the SBA guarantee is still with that loan. So the bank is at no risk.
Hey, good for the banks.
well, got to get something out of the deal, right?
That's why you could pay that $1,000 CD to so when that when does the so I'm going to go through it. I've already gotten my forgiveness. I owe $100,000. I asked for 5 years. When does my interest start on that loan? Does it start back when I received it? Does it start on the day of the forgiveness? I think that's another question I keep getting.
It starts on the day of forgiveness. So the SBA will pay us the interest on the $400,000 that was forgiven from the note date. The $100,000 that was not forgiven, that will earn interest right from the note date. So that'll have to get rolled into the loan and paid off over the remaining period of time. And you're responsible. The borrower is responsible for the $100,000 from the point the forgiveness occurs.
Perfect. Now, let's say I'm a deadbeat and I default on my loan. What happens to me?
Well, the bank will go in and collect the payoff, and then the borrower will then get put into collection at the U.S. Treasury. Because the SBA is part of Treasury, so there was almost 6 million loans in the first round, so it might be 30 years before you hear from somebody, but I don't know. I don't know that.
I think most of them are going to be forgiven, and I wonder. And I think my gut tells me is that somebody will be out there that we talked before that's going to forget to sign up for forgiveness and then say, oh, I'm not going to pay it. I don't care. And I've always told clients, if you take it, that's fine. If you're not going to use it all, that's fine. Give it back. You don't need it. Don't take it as a loan because you're going to be on the hook. I mean, let's take a 40. Well, let's take me 40, whatever it is, mid 40s. I do this loan, and then 15 years down the road, I get a notification from the U.S. Treasury that says I owe $80,000 plus penalties and fees. It's not going away. I think that doesn't go away, and that's what I want people to understand that. And it's no different than the EIDL loans that people went out there and they got these. They just don't go away. So you got to be careful with those.
Okay.
Paula?
Okay. PPP 2. One of the newer industries that they've allowed to go into PP2 is what they call the Section 501c nonprofits, which are part of the business leagues, including the chamber, which I'm excited for them, visitors bureaus, and destination marketing. They must have less 300 or fewer employees and no more than 15% related to lobbying, and then no sports leagues are eligible. I just wanted to start that out on that end. The simplified rules are that for those that this is your first time, you are able to have 500 employees or less, but this is your second draw, you need to have 300 employees or less. If this is your second time, you have to meet this qualifying event. If it's your first time, you do not. So you must have had a decrease in gross receipts of 25% or more in any quarter from 2020 down to 2019. So you may be able to show your return in full, but basically all you're required to do is have one quarter in 2020 that decreased versus 2019 by that 25% or more. and that you must, use that full amount of the PPP loan, before the expected date of the second PPP. I'm not sure if there's any kind of wiggle room there, Tim, that you're aware of, but I know that was at the point where we were preparing these slides. So
Yeah, I haven't heard of any wiggle room. You figure the first loans were finished by August.
Yeah.
So if you have 6 months from there, so, I would say most, if not all, of the first rounds are already been used up.
that's right. Yeah, that's what I would expect too, but.
Yeah.
So,
I think the big piece that we see is, and I know I have another one of these, is that they couldn't use them because they were shut down due to government, which came to the safe harbor provisions, which went
Yeah.
through that. I think someone had asked this question, and Paul, you and I discussed, is that clause, you must use the funds. And Tim, I'm not sure what you're doing over there is, how do you identify it? Is it because they've submitted an application, or what if I came in here and I haven't even started my application process? Would you then make me go through the application process to ensure that I've used those funds?
That's a very good question, Pete. I was thinking about how we document that, and frankly, I think it's probably on the application for the second loan that you've used the first loan, you've used up the money and you've used it correctly. I'm personally not requiring any documentation as to how the first loan was used, or that it's used up. So I think it's
a question.
Yeah, it's a question. I was thinking
Yeah.
about that the other day, and I don't have an answer, and I'm
Yeah.
thinking I'm gonna make, how do you prove that? I don't know.
I've got it, guys. I've got it. So in the application itself, there is, the borrower will have to sign off saying, one of the lines says, the applicant received the first draw paycheck program loan, and before the second paycheck loan is dispersed, will have used the full loan amount, including any increase of the first draw, only for eligible expenses. So it's in there. They have to sign off. So,
That's what I thought, and we're not asking
Yeah.
for actual documentation. So.
it's up to them to,
Yeah.
Perfect. All right.
Okay, so we've got the maximum loan amount for your first-time borrowers remains at 10 million, as it was in the previous one. And the maximum loan amount for the second-time borrow is 2 million. So that has, changed. However, the calculation for the loan amount remains 2.5% of your monthly payroll for either 19 or 20. And that the maximum amount per employee is $100,000. So if they make over 100,000, you can't include more than that. Now, most people in this scenario are using 2019 for two reasons. One, because their payroll in 19 was higher, and two, because the bank already has the documentation for 19, so you're not required to give them anything further. I don't know if Tim, you want to make a comment further on that, but.
No, that's accurate. Most, I think 100% of my loans that I've worked on personally here are all using 19. So all they do is send in the second draw application and provide documentation about their quarterly decline. And that's it. It's very simple and fast.
Okay. So that's the uncertainty piece. I don't know if there's anything else that you've run into, Pete, that you.
I think the only changes I've seen, and this was probably, I think I have a couple clients over this, that they had, a couple of stores or a couple of small operations, and they added one in early 2020, pre-COVID. And then all of a sudden, when they got into it, they said, well, wait a second, I have more employees now, and I did have a decline. So they are looking at 2020 wages because one guy added a new store, and of course, he got hammered on that. That's the only one that I've seen that it's been hit. I think the other piece is the decrease in revenues and how to do it. His was an interesting one as far as looking at it. But other than that, it's been everybody said exactly what Tim said. Check the box, use the prior information, and move on.
Okay. So one of the, hard hit industries, of course, as we all know, is the accommodation food services industry. And those that have a NAICS, which stands for the National, not quite sure, sorry about that. I had it in my
That
head.
little code we all use.
I had it in my head, sorry.
Right when you started
Gone.
saying it, I go, what is that again?
That starts with 72, which is for everyone but a nonprofit. That code is on your tax return. It should be on if you're a Schedule C or any kind of entity other than the nonprofit. They don't have the NAICS code. There was a link that I had put in, but I think that got missed on the prior slide when we updated it. And it's basically NAICS.com. You can go on and find that. But I will have Melissa include a more updated slide. It was just that one piece that I missed. So that you can go on and find it if you don't know that code. So tip it off to you on the seasonal piece.
I think back on that code, and I, regrettably so, I had one with this where the client should have had a code that started with 72. Because of some other prior issues or the way it was reported, it did not. We did have to go back and amend the return just for that. Doing this for well over 20 years, that code really didn't. I knew that it was being used by some party somewhere. We never really used it, so it was not of any major concern. If you do look at your return, for example, a restaurant or a camp or something like that, and the code is incorrect, just change it and then give it to the bank. If you give it to the bank with the wrong code, you're going to be rejected and you'll go back to the 2.5 times. The seasonal application, this is another piece, really, depending on, of course, in New England, we've got different seasons. I've got a few camps that have to deal with this. It just does give you a different piece. The only problem that we found on those seasonality businesses is that they were shut down during the summer, that they were not eligible to spend all their money. So they did have to send some of that money back, which is interestingly enough, and Tim, maybe or Paul, this answer is, if I'm a camp and I got all this money and I can't spend it down, but I need money for this year because I experienced a 90% decline. Under the act, it says I must have spent all my money, but I couldn't spend all my money. So the question is if you check the box saying a safe harbor, I get to keep all my money, right? So I don't know, Tim, if you've had any that paid their money back or not.
We had borrowers that paid back their monies, but not seasonal wise. I don't know how that works, Pete, to be honest.
Yeah, it's going to be interesting. And I've got one that's going through the second piece now because they just didn't have the availability to do it. So it's very interesting. But those that are seasonal, you're going to go through the calculation. And my advice has always been, and I hate to say it, but you want the most advantageous now because we're not sure what's going to happen. If you get the most advantageous, you can always pay it back. If you pull back on this and you need the money later, that money may not be there, and it may be the difference of life or death for your company.
Right.
And a reminder, you don't have to spend all the money to spend all the money. I hear that a lot. I'm not giving it back to the government. And I'm thinking, well, don't be foolish and spend the money and then pay more on payroll taxes so that you don't give it back to the government. You spend it on what you need, and that's all you do. You don't. I have multiple clients that go, nope, I'm spending it all, I'm spending it all, I'm spending it all. So be smart about the process.
All right. I did find it's the North American Industry Classification System, and it's for those quickly, it's www.census.gov.
That's right here.
Okay, you got it?
It was on the next slide.
All right, sorry. I thought it was on the one before. Sorry about that.
I think on the spend down, you're going to be in the same process as you were in the first PPP.
Yeah.
The best part of this is we're all very familiar with it. There's no uncertainty like we had back in April and May and June. You could send an email to Tim, to myself, to Paula, to whomever. We can pretty much rattle off the answer very quickly without the, we're waiting for this, this, and this. Obviously, you see the code and then the availability period. I would assume, even though it's available through March 31st, that it's going to be gone before then. I know all the banks have been accepting applications for at least 10 days now, that the funds are going in. I can say that it's not as mad of a rush as it was the last time, but it certainly would be. This is I think that the next key piece is the gross receipts defined. This is clearly laid out by the SBA. It was in their regulation early. There's nothing that's there. I think the biggest piece here is your PPP funds from the previous receipt are not included. It's clear. There's nothing there. The interest, the dividends, some people have investments. The unrealized gain doesn't matter. Here's the big question that keeps coming up, and we're seeing this more and more on nonprofits is, hey, Pete, I've got a grant. Does this count? Yes, it does count. Hey, Pete, I got the New Hampshire's, the Main Street funding. Does that count? Yes, it counts. I can't see anything that says contrary to this, but some of the entities out there that receive the hazard pay, the $300 per payroll to go directly down to the employee, technically it's a grant, but the question becomes is it's a direct pass through. There was no, the entity didn't receive anything. It was passed down directly. They were the only ones who could do it. I've argued that, hey, it's not income, but I could also argue that it is income. I think when you receive that money, I think you need to inform the bank of what you've received and what's been expended.
Yeah, because it could fall under that. It does not include last bullet item, amounts collected on behalf of others. So it may, fall under that category. We just don't know.
Right. And the big thing is and it specifically states under this reg, if it's not included above, it's included as income. Another big thing, and actually this chance came up on Saturday is, hey, Pete, I've got this money. Do I include it? Well, you have to follow your accounting methodology. So if you're a cash basis, it's whatever your return is going to be. You can't just choose when you want the income to come in and when you don't want it to come in.
That's right.
The other big piece is going to be, people holding checks or doing stuff like that. You really couldn't have done it. But I think when you go in, you need to be sure that this is correct and that you met that criteria, because if you spend the money down, later, lo and behold, in April, June, or July, the bank comes in and looks at it and says, you didn't meet the 25% test, or you get pulled for audit, you're going to have to pay that money back. So I've told people to be a little bit more cautious on this one.
Yeah, Tim, I know you've had some people just providing you with information, just different kinds. I don't know if you want to elaborate on that.
Well, the 150,000 and less for loans, new loan applications, the rules allow you to request the new loan but not provide the reduction at the outset, at application, but you have to provide it at forgiveness.
Good point.
We're taking the policy that we want the proof up front that you had the reduction in the sales. And that way we have the documentation. So at forgiveness time, we're all set.
Okay.
So we're, what kind of information? I mean, I've seen some pretty rudimentary calculations. I'm trying to get better information. I came across one client that his QuickBooks didn't go back into the first quarter of 19. So what he did is he provided us copies of bank statements, and we were able to, show the revenue that he had in that first quarter, or whatever quarter it is that is under review. So, yeah, I'm seeing everything, but I'm trying to get the best documentation I can up front.
That sounds like a good policy in my mind too.
Yeah.
Easier to get it up front than later sometimes.
Right.
It makes sense. And I know that they say everything is there. I just, again, I don't want to go down the road 2 years from now and then something that pops up because SBA hired a team of, 1,000 people to go out and look at these things. And then, oh, by the way, Mr. So or Mr. and Mrs. So-and-so, you owe back the $150,000. That's not, we want to protect the clients as well as everybody else. I got to say, this might be a record. We're 40 minutes in and we haven't had one question. Then again, it is Monday. Maybe everybody's still sleeping.
Plus, this is the second round, so it's, it's definitely.
Well, it might be, this is Margaret. I probably encourage people to wait till the end to ask questions just to get through the slides first. But if people do have questions, as I said at the beginning, please use the Q&A feature at the bottom of the screen and type those in, and I will relay the questions to the panelists.
Pete, I'll comment. Pete, the SBA is hiring contractors. and it could be thousands, who knows? So it's not the organization. They are training people, and they're acting as contractors, and we're getting emails and during loan review of some of these first round PPP loans already.
I'm not surprised at all. I would think, given through some of the data and the information that came up, it shouldn't be a problem. I think those who waited to submit later on with the 24-week provision is having less and less problems with this. Those hit harder with businesses are not. But yeah, it's, if you submit it wrong, you have to expect that they're going to come back after it.
Mhm.
Yep.
Okay. Eligible costs, as most of you know, that the same expenses that were in the first round are included, but they're also adding COVID protection and facility modifications, property damages related to public disturbances during, and then software cloud computing services, and that's expenditures to suppliers that are essential. So at the time of the purchase to the recipient's current operations. So basically, there are some additional amounts. And as I said previously, those amounts can also be included on the loan one that was last year. If you need them. So, and then nothing has changed on the taxation and remaining loan terms as we previously described.
So those of you who looted your own storefront, you are eligible to receive repayment for this.
Mm.
I did have somebody ask me, they said, how did this get in there? And I said, I don't know. Some of these bills, somebody must have been sitting there going, what about all the looting expenses? I know New Hampshire is a heavily trampled state, so that'll be very helpful for us.
But it's, it's good for them because a lot of insurance wasn't covering some of that stuff completely. So, okay, and then the last piece, Pete, I'll let you take over. That's just something that came in.
So under the, as part of the new act was previously this retention act or this retention credit, you were not eligible if you had received PPP funds. What they've done is under the new act is they've allowed it for 2020. If you did receive it, you would receive these credits. What I've done for this, and there's a pretty good, it's on a case-by-case basis because it's not as simple as the PPP 2 where you can do this. The piece of this that's important is those people that had that 50% reduction, government shutdown or state regulation shutdown, that you want to start to go down this road for potential credits. You can go back and receive these credits. I would say probably 99% of the clients that we deal with are not even eligible. If you can help out that 1%, this is really where I've tried to focus on anyone who might have met this. I've sent it to them. I think the big ones have been camps, wedding facilities, bars and restaurants. I know that they had decreases, but I did not see anybody that had a decrease of more than 20 to 25%. They all seem to adapt to the changes. Other industries, I had one manufacturer basically just shriveled up. They were able to collapse down, which they're still in business. Those are really the bigger entities that are going to see this credit that's available. I think I bring it up only to the fact that if you are somewhat in that area, it's worth the visit to make sure that, hey, Pete, can I possibly get this credit? That's really the only piece. And to get the credit, you're going to, you can file it on your 941s, which are your payroll tax returns. And if you were eligible for it in 2020, I believe you can go back and amend those returns.
Yes.
I believe, well, I don't believe, if you look at the 941 from 2019 versus 2020, it's a full page longer for all these credits and refunds. And so just take a look at that. Like I said, if it does or potentially meets where you may be, let us know and maybe we can help you out. I think the final piece that we discussed as far as the PPP and a wrap up, these are just some of the things that you or may be impacted or maybe have a benefit. The net operating losses to go back and get some money from previous years, the charitable contributions, the $300. This is a direct deduction from your income. I will almost guarantee you that I won't see one return that doesn't have this. Everybody donates the max, right? So I will say that. The retirement changes, there's a lot of them that are out there. If some of you have taken advantage of the taxation, taking your money out, waiver of the 10% penalty, and then the taxation extended. And I think the RMD suspension, the student taxes, the student loan payments, and then I think the payroll tax credits, the families first. Again, I mentioned in the beginning, please make sure you understand that running a business with payroll, if people go home, not eligible to work due to COVID, you can receive credits to continue to pay them.
Yep. Super. Thanks, Pete.
Thank you.
So, Margaret, any additional questions come in?
I'm not seeing anything in the Q&A. Anyone who either is on Facebook or this Zoom link, we are monitoring so we can pass your questions along to the panelists.
Okay.
So folks, if you do have anything you'd like to put to the panelists, this would be a great time to do so. So in the meantime, though, anything else, any parting comments? What if people don't know where to go to, maybe they don't have an existing relationship with a banker or a CPA such as yourselves? What do they do?
We'll let Tim start off because I think they need to, understand that piece. Whether you have to be an existing client or not would be.
We're only taking loans for existing clients right now, Margaret. So just a way to make sure we can handle our existing book and not get overwhelmed. That may change, but right now we're still working with existing clients as things come in. I believe the Small Business Development Center is offering guidance that on how to do forgiveness and do new applications. I strongly recommend they reach out to their financial consultants, CPAs or whoever, and work with them to get the forgiveness applications done because they're very complicated. If you have a larger than $150,000 loan, you really need to be working with your financial consultants to make sure those applications are accurate. Makes it easier, certainly on the banker's side. I would like to add one thing about the Small Business Debt Relief Program. As part of this December 27th legislation, they renewed the fact that if you have an existing SBA loan through the 7A or the 504 debentures, SBA is going to continue to make payments on those loans. They made 6 payments during 2020. They are going to make 3 payments in 2021. I believe that's probably going to start January, February timeframe. So that's an automatic 3 payments. And then newer loans are going to get the same 6 months if they were approved within a certain window here in 2021. And if you're in a certain NAICS code, and I don't know what those are off the top of my head, but it's basically any public facilities that had to shut down or limit. They are giving additional, I believe, 6 months of payments to those specific industries. So there is more help behind the scenes for SBA loans.
Good point, Tim. Thanks. Because I have a few clients that were able to get that relief, so that was helpful for them.
I do know that the Small Business Development Center is a tremendous resource. If there are folks on the webinar today or on Facebook who really don't know where to turn, the Small Business Development Center, it's free counseling. We have an office here in the Seacoast. They happen to be headquartered right here in Dover. In the Mill building. Warren Daniel is the Seacoast Regional Director there. The other thing I will say, I did hear from another one of our member banks, Eastern Bank. So unlike First Seacoast, they are opening it up to non-clients. I'm not sure how many other banks are doing that, but Eastern did happen to reach out to the chamber and let us know that they are working with non-customers. And I'm not sure if that's new with this round of PPP, if banks couldn't do that in the past or not. But again,
I think it depended, and what it is, like First Seacoast, they want to be able to, get the funds to
their customers. Yeah.
But that changed just like last year. Yeah.
That's everybody's priorities, obviously, to help their customer, but I just want people to know that there are resources out
absolutely.
there. If you don't have an existing relationship, it doesn't mean you're out of luck. So if you need any of that contact information, please reach out to the chamber. So we did have a couple of questions, people looking for the slides. This is a lot of information, as we know, a lot of detailed technical information. So the slides will be available. Melissa has posted it on the chat. So if you take a peek at the chat, there is a link there. All of those who participated in the session today will get an email from the chamber with a recording of the session as well as the slide presentation. Paula did indicate, I believe, she was going to make one slight change, so we'll make sure we.
Oh, I was wrong, Pete. It was on the other, when I changed it, I put it on the slide afterwards.
Okay, so it's all set. So the slides
is.
that Melissa has posted is the correct version.
Yes, it
So
is.
the other thing I just want to mention is that the chamber was eligible this go around. We're a 501c6. Now 501c6s were not eligible in the last go around. We are eligible this go around. So if there are other 501c6s out there who are watching, we are eligible this go around. And I did fill out the application. We have a relationship with First Seacoast Bank, and we have a wonderful contact there who walked me through it. The form was very easy. Now we're a first time. I understand the form is different if you're a second time. Is the form more complicated if it's your second draw, or is it still fairly straightforward?
The second draw has just the quarterly comparison.
Right.
You have to prove the decline. I believe everything else is pretty much the same. The second draw has information about the first draw loan numbers and things like that.
Right.
More different certifications. But again, I think overall they're pretty straightforward. Check the box information.
It's about 2.5 pages, Margaret.
Okay, I found the first draw pretty straightforward, but I don't have experience with the second. So I just want people to know it's not as daunting as it is. We do have questions coming in, panelists. So the first one, Janice would like to clarify that a veterans organization is eligible for the ERC. Does that give you enough information, or do we need some additional details?
Eligible for the ER.
He says ERC. I'm not sure what ERC is. Janice, if you're listening, could you type in a little bit more information? Maybe I'll move on to the next question while you're clarifying maybe what the Veterans Organization is or how it's organized and what you mean by ERC. And then we have another question while we're waiting for more information. So someone is asking, just to clarify, can we choose which year's payroll amount, either 2019 or 2020, we use for the loan calculation? 2019 was obviously the higher payroll amount than the 2020 COVID year.
Yes, they can use 2019, and that's indicated on one of the slides that we went over. So that you can use the 2019 over 20.
I would add that the loan amount is calculated on 1 month of payroll times 2.5. So if your payroll was higher in 19 and you're worried about forgiveness and you would want a smaller loan used in 2020, I still think you're probably going to be okay using the 19 higher number, because you're going to have 6 months of payroll to earn the full forgiveness. So it's hard. I don't know. It's hard to imagine that you wouldn't have enough payroll using 6 month covered period to eliminate and get full forgiveness on that loan.
Right.
That payroll includes health insurance, payroll taxes, correct? Not just salary.
Correct. Right.
Yeah.
Chris made a good point on the ERC. It's the
Okay. Yeah.
that you talked about, Pete, is the employee retention credit.
Retention credit. Yeah. And Janice did indicate she's referring to the VFW, and she was inquiring specifically about employee retention credit. She said they qualify otherwise with regard to decline in revenues.
Back to the I ran a quick summary on that 19 versus 20 payroll. the kind of rule of thumb would be if you use your 19 payroll, as long as you are not reduced below somewhere around 62%. So if you have 100 employees in 19, as long as you have somewhere around 65 employees in 2020 and 2021, the 24-week period should cover it. And this is assuming normal rent, normal utilities, normal other stuff. So I think, under the scenario that you just discussed, you can still make it and you can still use the money and you can still survive, even though you're at that low rate. Like I said, like Tim said, I think it's a no-brainer. You go after, you use the full 2019 data. If you're not going to make it, you've got the savings there to pay it back. You can't go back and get more. Well, I say that now, but who knows? Maybe there'll be a PPP 7.723, whatever it is. But again, as of now, I don't think you're going to see too much more of this, if any more funding.
And on
So
the
getting
employee
back to-
retention
yeah,
credit,
yeah.
I don't think that there's an exemption from any type of employer being able to obtain that credit. Pete, can you think of anything?
No, it didn't say anything in that act because it was
No.
that credit was there back in 2020 anyways.
Yeah, there's no exceptions to the type of employer that is able to obtain that as far as, 501c6s or veterans I know are, I don't know if it's 17 or 19 or something like that, but none that I know.
Take it at the chamber, and I think it's higher this year than it was last year, and it really was a tremendous help. So I hope you are eligible, Janice. Like I said, we took it at the chamber, and it definitely helped. I'm not seeing any more questions, folks.
Okay.
Oh, no, wait a minute. I take it back. One came in. Could you clarify which time period you can elect to use for reduction in gross receipts?
It is
Well,
either.
any quarter in 2020 over 2019. So if it's the first 3 months, January, February, March, 2020 versus January, February, March, 2019, and so forth. So each quarter you could use, or you could use the entire year. There's no restrictions on what period you use.
Okay, so Greg, hopefully that,
Well, some clarity on that too, because this did come up with someone else. Most people, when they're looking at their QuickBooks or whatever accounting software you're using, that most of the attention is paid on the year end, whether it's a 12/31 or a June year end. So that's typically when the cleanup happens. You have to be careful with your postings throughout the quarters, because if you mispost something, or you were late to reconcile something, that can impact that. So
That's true.
I had for example, they received a $30,000 deposit that they recorded as income when it shouldn't have been income, or vice versa. So that's kind of, I went through it with the client to say, okay, are we comparing apples and apples? Are you recording the same transactions? That's all you got to be careful of.
Yeah. Again, that's a lot of, some details there. So you just have to be careful.
all right, not seeing any more. And I think if there were some on Facebook, Melissa would have typed those into the chat. Melissa just indicated there aren't any questions on Facebook. So at this time, I would just ask if our sponsor, Chris,
Yes.
assuming you're still with us, Chris Orea Chris Lays from Orea Solutions is our sponsor for the Local Expert Series. And Chris, if you would just like to give us a little bit of detail about your company and what you do.
Yeah, I provide a wide range of IT services to small and mid-sized businesses. And, you're a small business, you don't really know what you need. So I try to provide everything from the internet coming into your building to the hardware in the building to support for that hardware and those services. Try to be sort of a one-stop shop for all that. As a promotion.
I think your website is orea.solutions. Is that?
Yep. Okay. Yep. Using one of those fancy new modern top level domains.
Yes. When I looked it up, I was a little confused. I said, ooh, he's fancy.
It's all right. It confuses lots of things, computers and humans alike.
And Chris, I know we had met previously, so Pete is the one you want to connect with. So if you see his email, as far as just making a connection there, I wanted to connect you to.
What did I do wrong now?
Nothing. It's just you're on the IT committee for the firm and I'm not, so.
Got it.
Chris,
Oh,
And-
I just like learning about, how people manage stuff. So accountants and lawyers have the same problem. They're shifting a lot of important private data outside their company, which is a rather rare situation. Most businesses shift data inside their companies. So I've always liked to learn about that tooling because I have some smaller clients who don't have good solutions for that.
Well, we'll have to get together. I'm more than happy to help you.
Chris is a big supporter of the chamber in other ways. He comes to a lot of our events, morning mixers and business after hours. So if you do have questions for him, he really is a wealth of knowledge. So hopefully he'll be at our local expert series going forward every month, but you can also see him at morning mixers and business after hours. So thank you, Chris, for your support of the chamber. We truly appreciate it.